Hey everybody, I wanted to walk you through two trades that I made yesterday, September 21st. That was Tuesday. Today's Wednesday, September 22nd. I'm wearing my bullish, it says bullish on it, sent to me by user Ghostbox over on TikTok, and I guess it worked because I got this shirt yesterday, sold my stocks today. Um, I wanted to walk you through these two trades that I made, walk you through why I made them, how much I made, why I got out, and why you can always get back in. I feel like this is a common thing that I see a lot on TikTok or whatever, where people go like, I bought it at this price, I sold it higher at that price, and now it's going up even more. Oh, I missed my I missed my. You can always get back in. So let's take a prime example right here. This is Stonemore. They own all the graveyards, cremation centers, crematoriums. I don't know what you call it. Um, they're in the death business, and because of COVID, I guess it's a good time to be in business. Um, you can see here that we had this big high of $3.02, and then boom, just this guy tumbles. Now, someone out there might say like, well, when's the right time to get in? Right? Look at this. It has a breakout to the downside right here, and then it stays on the negative side of this 20-day moving average, which is the middle line in these Bollinger Bands. So I talked about this in yesterday's video, but if you didn't see yesterday's video, then this is new to you. The Bollinger Bands are comprised of a resistance line, a 20-day moving average in the middle, and then a support line down here. As the bands narrow together, it indicates that it's much more likely to have a breakout. The other thing you want to pay attention to is where the stock is trading in relation to this 20-day moving average. If it's on the negative side and continues to be on the negative side, I step back. I wait. I'm not eager to jump in. I don't want to try to time the bottom or catch a falling knife or any of that stuff. And you can see that it keeps having significant breakouts, right? Like this green line is the 50-day moving average. Where's the 50-day moving average? Where does it go? Oh, it's right here. So it crosses to the downside right here. That's sell signal number one. Sell signal number two, sorry, someone's driving by, is a crossover of the 200-day moving average, which it does right around here. Sell signal number three is that it's on the negative side of this 20-day moving average. Sell signal number four is that it keeps breaking through all these Fibonacci retracements, just going lower and lower and lower and lower. Now, are there the possibility, or is there the possibility of quick trades to be made on the way down? You can see it's in oversold territory. It's in oversold, oversold, oversold. Well, if you match up the cursor to this chart, no, it doesn't really look like it. There's a lot of bad news here. This is supposed to be good news, right? This is supposed to indicate to you a reversal is coming. But the fact that there are so many negatives, you can put an X through this relative strength. It's not working on this one. What I'm looking for is sideways movement, right? I always talk about it, consolidation. You want to see that the stock is consolidating. And sure enough, it starts to consolidate. After a long downtrend, a lot of oversold territory, it starts to consolidate. That's when I start paying attention. And as it happens, it has stopped perfectly on the 0% Fibonacci retracement, and it's just hanging out around the support level. This is good news to me, right? It means the selling is over. It doesn't necessarily mean that the buying is back in a big way, but it could be. So right here, no, hold on, let me find it. Right here yesterday, September 21st at 197, where I am exactly at 197. This is where I bought the stock, right here at 197. It wasn't particularly oversold, at least here. There weren't any real significant reasons. There doesn't always have to be a clear-cut reason. I bought it because of this. See, and I can circle it on the chart. For me, it was $3.02. It sold off hard. It broke through every support line, every barrier that we look at. It stayed in negative territory, broke through every retracement. Lots of bad news. and then it consolidated. So I opened a position. I got in right here at 197, and then this morning it popped. It wasn't a significant pop. I think I'm up 6.5%, but 6.5% on my money in one day, not bad. I took it. Now, the thing I wanted to talk about is people are always saying like, "Oh, I missed my. What if it goes higher? What if it goes higher?" Well, if it goes higher, you can always get back in, and in fact, that's what I'm probably going to do. The next thing I need to see from this stock, even though we have crossed over this retracement and we're moving in positive territory, we still have a ways to go before we get like back up here where it's something significant. Could that happen in a day? Maybe. Could it happen in a couple days or a week? Maybe even a month? Who knows? There's no way to know. What I'm going to be looking for, though, is strong volume. And you can see the volume down here is mostly pretty weak, except for these big days right here, but they were negative. But if we can get big volume like this, but on the upside, and we can get a breakout on this Bollinger Band with the combination of strong volume and not being overbought, then I will likely start another position on this company on the way up. And where will I sell it? Well, because of my retracements, I've got price targets. I could sell at 228, 242, but the reason I took my profit in one day is because I wanted it. It was a significant amount, 6.5% in a day and basically a day and a half. I'm out. Now I wanted to go and look at the other stock that I traded. That's just their little alert. Fast Market is live at 10 a.m. Whatever. This is another stock that I traded. I bought yesterday on September 21st, and I sold just now this morning wearing my bullish t-shirt. The shirt is working. I can feel the power. I bought it at $4.95, and I bought it yesterday. So where's $4.95 on here so we can see? Again, pretty similar, but these retracements, by the way, are old. They were, because this is a stock that I trade quite frequently. So we'll remove it, and just to have the proper, I didn't use the retracements on this particular trade, but we can put them on anyway. So as you can see, now that we've put on the proper retracement, this is a stock that was $8 just a few days ago, and then had this big steep sell-off. Look, big red candle to the downside, big red candle, big red candle, big red candle. I mean, this thing was getting hammered. And again, on the negative side of this 20-day moving average for the most part, in negative territory, just like Stonemore. Pixelworks is, I don't even know what they do, to be honest with you. It broke through every single Fibonacci retracement until, hey, much like Stonemore, what do you know, stops right here at this support line. But when we drew our Fibonacci retracements, we can see it's the 0.0, it's fully retraced. So for me now, what I'm looking for is some sort of indicator to get in, and I got it right here at what did I buy? $4.95. This was 2 days ago. We had entered oversold, and we started to have a little bit of a move back up. Very small, but a move back up nonetheless. Where's $4.95? Right here. So maybe I bought it right around this crossover, somewhere right around here. That seems right. And much like Stonemore, similar reason, big sell-off and then consolidates on this 0% support line and a little bit of oversold. All those things made me want to start a position, but only start. I wasn't super confident with this one, so I only bought half of what I would normally buy with the plan of buying another half if we broke out to the downside and then ended up consolidating a little bit lower than this, at which point I would erase this retracement and plot out a new one. So that's the other thing I wanted to talk about, is not going all in all the time. Sometimes you can be optimistically bullish, but still have some concerns. And that is the way that I handled this trade. I got half of what I wanted, but still in a day and a half, right? I bought it yesterday. I sold just now this morning at 5.33. So right around here where this breakout was, making 7.6% in a day and a half. So on its own, 7.6%. But combining it with the profit from Stonemore, which was 6.5%, pretty good for basically a day and a half of work. And it's 10:53 in the morning right now. So I'm basically done with my day, and that's why I'm making this YouTube video at 10 in the morning, almost 11 in the morning. Now you might say, but like, dude, look, it had a breakout right here. It had a breakout to the upside. Why didn't you hold out? Why didn't you hold out for a little bit more? Oh, maybe it could have gotten to 553. Well, it might have, but it might not have, and I wanted my money, right? The way I look at this is, yes, I like to have money, and I like to have more money than I had yesterday, but I also like to have a higher quality of life and do the things that I enjoy. One of the things that I enjoy doing lately is making these videos and doing these TikToks, going to the gym, getting lunch with a friend. Whatever I want to do, I can do. I'm not glued to my work. I have the people are always talking about like work-life balance, but I feel like the emphasis is on the wrong word, right? Work first? Nah. For me, it's life work. For me, it's life-work balance. That's what I like to have. So if you live below your means, save your money, you invest your money, you can not feel like you have to keep making more and more and more. Not that there's anything wrong with making more and more and more, but you'll get to a point where you enjoy your life a little bit more, and the work can go on the back burner. And I don't know if I finished what I was trying to say here with this breakout, but the volume is hella weak. There's like no volume here. No volume. Now, if we had gotten a breakout to the upside this morning, but the volume looked like this, or like this, or like this, now you better believe that if the volume looked like this, or like this, or like this, my goal would have taken a back seat, because I would have seen that there was significant volume. So I would have held, and I would have waited, and I would have waited for a little bit more money. Hey, maybe we would have even gotten up into the high fives or low sixes, right? If we had some big surge in volume, like a big green candlestick like this, where it's 601, and then it goes to 670, right? If we had a big breakout like this with strong volume, then to hell with my goal. I'm going to sit back and I'm going to wait all day if I have to. But I didn't see it. I didn't see the strong volume to the upside. Kind of quiet, especially after the day we had on Monday where the markets tanked like almost 900 points at one point. I made my money. I got out. 7.6% on this one, 6.5% on the other one in a day and a half. Not so bad. So I don't do these videos to brag. I do these videos to walk you through my thought process, why I got in, why I got out, why I'm happy with my profits, and why I can always get back in if the momentum comes back. Much like the other stock, if the momentum is there and we start moving higher and having big breakouts with big candlesticks like this big green one, then yeah, I can always get back in. Remember that. You can always get back in on their trades. It's not done. And if it continues to go lower, hey, maybe it breaks the zero support line and creates a new one, and then we'll redraw the Fibonacci retracements and we'll go from there. But that's how I trade. I hope you thought this video was helpful. If you did, please hit the bell, please hit the like, please subscribe. Thanks for watching, and have a good day.